All right. What is up, everyone? And with everyone, I mean Auke. How are you doing, brother? Ready for some brain food? As am I. As am I, my friend. Let's give it 1 minute in case someone else drops in. Otherwise, we will be having a little solo session, my friend. But I'm sure people will drop in the next couple of minutes. But that cannot be a reason for us to wait. So let's dive into things. Today, the markets are looking slightly bullish. I'm saying slightly because these are all the assets that have a daily bias. And there's some pretty good ones. So we're definitely going to dive into it. But as you can see, it's not like it's a market wide bull scenario. So, for example, you would press all assets. We see it's still kind of dispersed. So it's not like the entire market is saying like, okay, we have to go up, right? BNB is a very nice one. We're going to dive into BNB because it has confluence between the weekly and the daily. Yesterday gave that 8-hour call on BNB, which played out very nicely. So that's one thing to wait. Let me first check. Auke, can you hear me and see the stream? Just so that I'm not talking to myself again for 20 minutes. Let me first get that out of the way. Last week I did a 20-minute session with myself, or anyone who's watching for that matter. Please let me know if you can hear me properly and see my screen and that I am live. And if yes, I will continue. Well, let me check myself on YouTube if we are live. I'm not gonna have this happen to me again. Yep, looks like we're live. Yep. All right, we're live. All right. Yes, I see you guys now. All right. What's up, Kuba? What's up, Hans? Good to see you here. Let's get things going. So, I personally, from statistics, without doing the TA yet, I do think things are looking good for continued upside. Let's dive into that a little bit more, though, because I saw what you wrote in the chat, Kuba, that there are some signs of exhaustion. I agree. There is some liquidity being taken on the upside. There is some resting weekend liquidity on the downside, I think, for a lot of assets. So something we need to keep in mind. But in general, I do think the statistics look good enough to take a wager on some longs, which is nice because we have not seen a lot of volatility, and we're going to get into that. But obviously, this price action that we've been seeing is very, very, very boring. Not a lot has been happening, so there's really not that many trades we could have taken in the recent 1 or 2 weeks. Now things are, at least today, things since yesterday evening, things are picking up a little bit again. So without further ado, let's just dive into the assets that we have. Little trick, what I often do is just filter on, and you probably know this, but I filter out all the days that have a bias of undecided. And then I can just see all the assets that have a certain bias for the day and what the rest is doing, right? So see now all the days with an undecided bias are gone, and I can easily see which assets are looking good. And there are some assets that are looking pretty good. So let's dive into some more statistical. I mean, look at this: YGD 2.7% against 74.2. I mean, that's really good. And BNB 20.7. It's not the best, but we have the weekly in our favor as well, which is really nice weekly. And this is the reason why I like this MTF page so much, right? Because I've already seen this in one glance that the weekly has really good stats on BNB as one of the few. Only, well, look at that. The cursed coin, XRP, strong bull. Well, look at that. BNB, strong bull. And, well, so but bull because this, like, I think if I were to press this, then we would have strong bull here as well. If I would just make it 21%, or yeah, see. So this is really a small difference. That's because this value for BNB is 20.1 or something. So it's just not hitting the threshold that I've set here of 20%. But obviously, it's negligible. So both BNB and they have a strong bullish signal, and this is why I like this overview so much, because immediately it will be clear to me that the two assets with confluence are BNB and XRP. Aave is already exhausted. Yeah, that one took off. I get that as a 8-hour call yesterday, but obviously you couldn't know it would lead to that much. Let's dive into some assets. So, that's why, see, 20.7. So that's why I like that overview very much, because I can immediately see, okay, the weekly has a high probability for upside. And so does the daily. So if we have the weekly here, and there you go, we see BNB right there, and only, yeah, so this is actually really nice. So with BNB, you can see that only 17% of weeks would move 8.1% up from the weekly open and then go down to take out the weekly low. This is how you have to interpret that. So let's actually start with BNB. Right there. Yeah, so I mean, this looks amazing, right? This looks really, really, really good. And the thing is that, yeah, right now, obviously, there's no entry here on the weekly. But what we do know is that the daily is bullish as well, right? So we already know that the weekly is probably not going to hold. We can see that the weekly, 84.5% of weeks have more distance than what we have already seen. So 85.1% have, like, at which point would you reach? Let me just check that. This is not what I'm supposed to be looking at. Like, what if we do 15%? Yeah, so let's say it's at 13% or something is where yeah, I fear we're going to be too late for this one. So all the way over here, like 50% of the weeks would come here, which would be another, oh, sorry, I should have marked that out. So this is one of the ways of using it, right? You can just check, okay, where does the average week go? Or this is not the average week, but 50% of the weeks come here and 50% of the weeks go further. So we're at that level, which would already be, if you could take from here, another 5%, not bad. But the thing is that now you have confluence between the daily high and the weekly high and the weekly or the weekly time frame and the daily time frame. So the daily time frame is saying that most likely we're going up, because only in 20% of cases would we go this far from the daily open and then nuke it back down again. Now, the only thing I do not like is this low right here. As I often say with price action like this, and then this is P1. It's not the best P1. Preferably, you would see this, right? That's way better. That's why I immediately said this looks great, because you have this on the weekly, right? You have that dun, dun, dun. Beautiful. So this is a really good low. So this is what I mean. Like, the statistics are bullish for the week, and also the PA just looks very good for a weekly low. So it's really nice, and therefore I'm inclined to say, well, I know this is not ideal, but in this case, yeah, whatever. It's the week, like, it's looking very strong. Obviously, there's a strong uptrend. It's impulsing. The weekly time frame is a strong bullish. The daily time frame is pretty strong bullish as well. So definitely worth a shot. But obviously, right now there is no entry. A little bit earlier, there would have been a nice entry, as we were on this 0.5 right there. And I personally really like the 0.5 for entries. So what you could do then is simply take the P1, and I know people limiting in at the 0.5. Like, up to the P2, it's already pretty much a 1-on-1 RR, which is good enough if you are having a high enough win rate. It really depends on your system and strategy. But now imagine, like, we know that the weekly time frame is trending up strongly. And the daily has to go up as well, and probably by quite a bit. Let me actually check how much the daily still has room to go. So let me put in the automatic, and right here, 78.3%. So a lot of days go a lot further for BNB than what we've been seeing so far. Let me just extend that. Yeah, and you can see here as well, if we select just these, so I do shift select, and here on the right we will get all the days. I should actually probably remove the filter mode there. Yeah, so these are all the recent days, and everything is red. In red is days that had a bigger displacement than what we currently had. So you can see that, especially recently, we just have a lot of days with more displacement between P1 and P2. So this is the distance between P1 and P2. So that's looking very good. So if you know this, then you could say, well, of course it makes sense to take profit here, but you can just kind of leave it open and expect, or at least anticipate on the weekly to continue up as well. And therefore, that would be a really nice potential trade that could turn into something bigger, right? It can start as an intraday trade, but you know that the weekly is likely to go higher, and therefore, you can keep it open, and it could potentially lead to something more. So that's a nice way of using the daily with the, there you go, with the weekly time frame. Now, there's a fair value gap here, so I think for me, this trade is gone. If it goes up from here, it is what it is. The only place I'd probably go into is somewhere there, if it gets that low. Possible long. I'll have it expire if that doesn't happen today. All right. Because right now, for me, and I would not put my stop loss here or here, and I think the RR to put it down here is too bad. Maybe you have another strategy to define your invalidation. Obviously, this can be, and then you can completely use that. But for me, I don't have it, so no entry there for me. And this is actually quite similar to what's going on across the board. So we have Bitcoin, a similar thing going on. Seen people talk about this. So Rafael Blanco talked about this in the chat. So we have really good stats on BTC as well. We have also really good stats on YGG. I want to get into YGG after this because I do think it's important. But BTC is P1's bigger distance, 6.8%. So only 6.8% of the days would we go this high from daily open, this far up, and then take it out again during morning hours, because it's filtered for morning hours automatically. And 75.5% of days do see more positive displacement. So also this is just looking very nice. I would definitely be interested taking it up. Right now, not so much. I think here the same thing. We have that fair value gap underneath. So a little sweep into it would be awesome, as long as we don't start losing it very quickly, because I don't think there's a lot in this. Yeah, so this is pretty much this is just a gap, right? Probably a bunch of single prints. So I don't think you want to go any lower than this here. You don't want to lose 60K, because then you could be here within no time. And if you're here, then whew, yeah, I don't know if that would hold. So I'd probably wait for that. Crossing, entering. All right, have that set. But all in all, it still looks good. Like this P1 is once again not optimal. Once again, this is because you prefer not to see a P1 like this. You prefer to see a P1 like this, or at least I know somewhere here. That pivot is close. But once again, there's actually something I haven't done yet. Man, I always check for naked daily point of controls. Let me check. I haven't done it yet. All right, that's good. No naked daily point of control there. I mean, BNB I'm not too worried about because it's looking really strong. So we did hit that naked daily point of control. Yeah, so that is usually a warning sign for me, but in this case, it's looking so strong that I would be this. So this is one of the exceptions where I would probably discard that rule. Where I'm like, yeah, okay, we did hit that naked daily point of control. I mean, it depends on how aggressive you want to be with the rule. You can just say, well, I don't trade into naked daily point of controls. Period. For me personally, this would be one of the few exceptions where I would say, you know what, I will do it because clearly the trend for now is very strong. I think it's very rare that such a strong trend would lead to this. The weekly statistics are very favored for upside. Daily statistics are favored for upside. So in this case, I would say, well, okay, it is what it is. It's not looking too bad. But what I want to emphasize is one of the exceptions. I really rarely do this. So that's why actually, in terms of price action, I like BNB a lot more because you can see, the difference between the two. If I would grab both of these next to each other, and I will make things a little bit more clear by removing the volume right there, getting this one set up. So you can clearly see the difference in price action right here. If I just remove everything, then you can see that Bitcoin is ranging, and we are right now at the top of a range. It's not the most beautiful range yet, but it seems evident that we're sideways. Whereas, well, I can do that better. Whereas BNB is clearly trending up, right? So I do agree with Kuba that this is something to take into account. We are at higher levels on Bitcoin, and we're at higher levels as in we're at the top of the range. But in this case, yeah, I still think I would honestly still go for it. I would probably still go for it, but if I would have to choose a favorite, without a doubt, BNB here because it's just clearly going way more in an uptrend than Bitcoin is. Even though BNB hit that naked daily point of control here, whereas Bitcoin has been going sideways and we're at the top of the range. So that's just a context you want to take into account. Let's see where all the volume is here from this move down. So we are even at the point of control right now, which can usually lead to some pretty choppy price action. It's another thing to keep in mind. But at some point, you also got to say to yourself, well, this is 6.8%. That's very low. 75.5%, also still very good. We can go into time-based statistics. Let's see what hour 5 has done. Hour 5 has been 76 days since it put in a P2. It's actually not that long. But 75 days also since it put in P1. Well, it's pretty crazy. It means it put in P1 first and then, or P2 first and then P1 the day after. But it's definitely very uncommon, and especially if P1 holds, it seems likely that P2 will get taken out. So at the very least, if you were to be trading this mini range right here, and you'd have this as your very high, and I don't think this is the best of ranges yet, because I would like to see this volume profile filled up like this. But at the very least, it would prevent me from shorting this right now, as I do think that if we were to reject, then something like this would be the more logical play. So maybe that actually would be a really nice setup for today, where you would see something like this. And then here you just have to judge what the price is doing. But I still think upside is most likely for Bitcoin. It's like if the one of the thing I was saying in the chat that yes, I know that some things are not ideal. P1 hour zero, or I mean that's ideal, but the way it's put in. But if your statistics are this definitive, this one sided, then it's for me it's just worth a shot. There has to be some really extreme examples or really extreme warning signs for me not to take it or would want to take it, because in general, if you have these kind of statistics, yeah, it just doesn't get a lot better than this. Yes, you are going to lose some, but I don't think you're going to lose that many if you keep taking these kind of setups. So at some point, there has to be a certain threshold of statistics where you can tell yourself, and this is up to you where that threshold lies, but that you should be able to tell yourself, well, that's good enough for me. I will just go for it, and then accept that some of them you will lose. So conclusion: ideal, no, but statistics are very, very nice. So it's something I would still be willing to go for. And I do think that taking out this weekly or this daily high seems logical. And then we have to see if we can make a similar move as what we have seen maybe here, or the price breaks out of this area and goes higher. I don't know yet. Yeah, that I do not dare to say. I think personally think it is always more safe to assume that price is going to fake out rather than breakouts, because fake outs happen more often than breakouts. We see that weekly candle. Yeah, man, last week was terribly boring. Look at that. Nothing that happened. But this is one hell of a candle. Like, this candle is actually crazy. I released some statistics on this candle. This is really, really, really rare. Really rare. Yeah, maybe good to go to the macro in a bit, because I have some more statistics on that. But we'll get to that later. First, I want to check into YGG. Just checking the chat right now. What's up, guys? It's HFT. You cannot hide from us, my friends. The new members will not know your real name, but we will expose you. What's up, Raphael? And the rest that was already there. All right, let's dive into YGG. So for me, everything is still looking pretty good for upside. I mean, these statistics, like I said, for me, it's just okay. It is looking too good. YGG is a very interesting one because we have a P2 at hour 1 and a P1 at hour 0. And we have a very deep retracement. So the question is there something to be found there? Let's find out. Liquidity. So let's zoom out a bit first. Let's see what YGG is saying on the weekly first. Gotta remove these. So not too convincing yet, 33.3%. Slight edge. Slight edge. Definitely needs a lot more room to go. The question is in which direction? Let's try to find out. Yeah, so this is all the weekend liquidity down here. This is the one thing I do not like. I definitely do not like. We left all that weekend liquidity. Usually you would get that, and we did take a lot of this liquidity up here. Let me check. This was definitely the resistance until we broke it. So we have here, oh, that's right. Right on top of it. Let's create it as a zone. That's a flip level. Just thinking. Yeah, so there's definitely a couple of things I do not like about this setup, but I come back to my previous point where I must say to myself, well, you know, it is not the most ideal setup, but look at the statistics 2.3 against 75.2. So that means that only 2.3% of days that put in a P1 around hour one or two are probably going to change those clusters to make it a little bit more, to get a little bit more data. YGG. Yeah, so you can see that this is very, very rare. And again, this is filtered for days that put in a P1 on hours 1 or 2, which is the case right now. Because those distances are different, if you want to know more about this, I released a tutorial on this. Also, shout out to Auka for writing the written tutorial. Many, many thanks, my friend. And I definitely recommend reading that. It's about the automated filter mode, and it really explains very well how this is. So, for example, right now we can see that the data is filtered on these two, so hour one and hour two. So days that put in P1 at hour one and hour two, because right now we have that P1 at hour one, and we can see that it's very, very rare. Let's check the last times this happened. Actually, not too long ago. Last time, March 22, 2024. I mean, not too long ago. Depends on your time horizon, but this is something I like to do. So now I know when the last time it is that this has happened, and then what I can do is that I can go back in time and see March 22, February, March. Yeah, so that doesn't, what I want to see is that, does that look anything like what we're seeing right now? Obviously, one data point is not enough, but we don't have many data points with this kind of price action. But it clearly isn't. I mean, this is a massive wick. Look at what we have right now. It is more based price action, so to say. There's more fundamental price action going on, which was clearly not the case in the previous time it happened in March. Oh, I went back way too far. Right here, we just had some freak wick occurrence. And this is actually, this kind of thing is one of the reasons why I'm going to make a pretty cool addition to the dashboard. But stay tuned. I have something in mind to statistically take this into account, so that you won't even have to really have to check the dashboard or the charts anymore. But so to sum this up, there's a couple of things I do not like about this. For example, all the resting liquidity right here, the fact that we're taking liquidity up here, which is so far looking like a proper liquidity grab, a proper liquidity grab. So we have that liquidity right here, and these were pretty much equal highs, and these were definitely equal highs, and I love equal highs, man. They are great. But what you see usually happen is that when they get taken, you usually see some kind of some kind of liquid like move above it, and then you want to spend some time and some distance. So you don't want to see an SFP like this. This for me is not a proper take of the equal highs. If anything, this is leaving further liquidity for later. And once you finally properly take it, what you usually see is that you see distance and time. My theory on that is, well, the distance is clear because you have a cascade of liquidations happening because obviously many people are putting their stops here. And the time is because this allows market makers the time to fill their orders, right? People often miss this point that you need both liquidity and time for the market makers to fill their massive orders. So far, this is looking very, very nice for liquidity grab. This P1 hour zero is not looking too great. We have a lot of weekend liquidity at the lows. However, I come back to my original point. I'd probably still take it. And the reason being is that what I said earlier, that at some point you also got to decide for yourself, well, some statistics I'm just very happy with. And in my case, I mean, 2.3%. This is very, very little. I mean, even I can decide to filter some more. I mean, look at that. Even if I take all the hours in the day, so, well, let me just remove hour zero. That will give us a more conservative estimate. So even if I would take all hours in the day as a possible P1, then it's still only 11%. But this is way too big of an estimate. It doesn't make sense to take afternoon hours because they generally have way more time, in my opinion. So at the very least, I would probably go for all the morning hours. And then we are left with even a little bit more. That's funny, 9.4. But regardless, both of them are very low. It just doesn't happen a lot, but especially not during hours, during the early hours. It just rarely happens. This is with hour three with it. It's just somewhere like depending on the filters you select, somewhere between 3 and 8%, where 8% is like a very, very, very generous estimate, right? Very generous. So for me, if I would say, well, 5% of the time, so let's take the middle of that and say 5% of the time, something like this would happen. I mean, that's good enough for me. It's like that. Yes, there are some things that are not looking too great. Yes, if it were ever to happen, I think this would be a good situation for it. But at the same time, we are trending higher. We have also a slight edge on the weekly because you could say this is so far the local trend, right? Not discounting this. And it's just really, really nice statistics. So at some point, you can also just say to yourself, and this is really personal dependent. It really depends on ETA. You might have some rules here where you say, okay, these are being breached, and I'm not going to do it. If I would have a naked daily point of control here as well, then maybe that, oof, just as I was saying it. So this, now it's becoming quite an accumulation of things. Yeah, I don't know. This definitely makes me doubt a little bit more because it just, now we have like three things that are looking a little bit negative. We have this massive liquidity grab here to equal highs. We have a naked daily point of control, increasing that liquidity grab. We have the pivot that is not looking too great. We have the resting liquidity down at the lows. So there's quite some warning signs right now. So that definitely makes me less eager. I would rather take BNB or BTC. They do look better from a PA standpoint. But I also think it is completely fair to say, you know what? I don't care. These statistics are awesome. They're great. 5%, whatever, willing to risk that. And if I get caught out on this one, I surely will not get caught out on the next one. So there's definitely something to be said for that. I mean, if you would have this one right here, that's already, like even from here, it's already a 2RR trade. with P1 below the low. So already really good. But I guess one thing you can do is look at the lower time frame and wait for a break of structure, which we had right here. Now we're just going lower again. If this one would hold and then just deviate below it, and then you have some slight break or something, that would be the best. Something like this, that could possibly be a nice entry. But yeah, summary, I don't want to talk on too long for YGG. The statistics are really, 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 really good. Really good. You don't often see him this good. So if you see statistics this good, in my opinion, it would be totally fair to say, fuck price action. I think it looks great. Let's go for it. On a higher time frame, you could say that this was the break and price went like this. And as long as we don't lose this, this is in play. So, there are some warning signs. It's up to you if you want to heed those or not. But my conclusion would be, even though there's a lot of warning signs, I would probably be willing to take this one anyway because the statistics are just so great. And then it is just also realizing that it's a part of the game that every now and then you're going to lose. Also, high probability setups are going to lose. And I do think there is a danger here in trying to become too perfectionistic. Because if statistics are this good, remember, at the end of the day, all we want to do is get a setup that is high probability over time. So over 100 times wins more often than it loses. And then it's just a matter of executing it every time you see it. And then some will lose and some will win. And I do think that the danger with overanalyzing it, as I'm doing a little bit here, or we're not overanalyzing it, it's fair analysis. But at some point, you also got to tell yourself, well, this does fit my criteria for a good setup, and I will just take it because even if I don't win an L, I will know I will win most of the next 10 trades, and that will make me profitable in the end. But you can always wait for some break of structure. And I'm not going to go this low on the time frames. It's not my area of expertise. So yeah, I do still think it looks pretty nice in terms of statistics. There are some red flags, especially, man, this naked daily point of control hit. It's really nice. So there are definitely some red flags there, but it really depends on your personal system, whether you want to heed those or not. From a PA perspective, definitely Bitcoin looks better and BNB looks better, in my opinion. Bitcoin is slowly moving up. What is BNB doing? Not yet. Getting a little bit of retracement would be nice if that comes back lower. So there was a long talk about YGG. Again, conclusion, PA-wise, not the best because big resistance and liquidity grab. Not the best combination. Then again, very good statistics. So that might sway you to give it a shot anyway. All right. Let's see what else is there. Gala, 68% of 9. STX. Let's see which one of these has better time. Let me quickly jump in the chat. No, all good. No questions. Yeah, okay. So Gala is definitely better because Gala has a current P2 of hour 9. And if we go to the time-based statistics, or let me check. Yeah, that doesn't happen a lot. So hour 9 is a very unpopular time to put in a P2. So Gala USDT. Oh yeah, I'm finding some support there, which is clearly an SR flip level, right? I mean, just look at this: one, two, retest, test, test, test. So that's clearly an important level, but so far we're not really managing to break it yet. See what the high time frames are doing. SR flip right there. So you're kind of trapped in between these 2 points. SR flip, SR flip. Maybe the better one would even be here. But locally, this one is really well respected, so it makes a lot of sense to keep it. Let's see. Make a daily point of controls. Nope. Non-hit. Good. What you want to see. All right, so we do know that this one is very low probability to hold. If the low holds, then this one is low probability to hold. We see that in terms of distance, it is likely to hold because only 5%. Wait, that's not true. It's more. 9.7% of the days would have such a big move from daily open towards the daily high, only to take out the daily low again. That's how you have to read it once again. So if I take these ones right here, these are all the last times that it happened. June 20th. None during hour 9, but more or less around the time. So if you would want, you can go into these and say, well, I'm going to check what's the last time it happened. But you can see it really doesn't happen a lot, right? So if I select all the positive displacement days, or sorry, the negative displacement days, you have to see, yeah, you see it really doesn't happen a lot. So everything in green are the days where P1 was closer than 6.1%. And everything in red is the ones where it was further away. So you can see that it really doesn't happen much. It really doesn't happen much. So we can drive to conclusions. Purely statistically speaking, this one looks pretty safe and this one looks not safe. So I think I have to come to the same conclusion that upside seems more likely. The only thing I do not like is obviously the resistances we're hitting, but I keep coming back to the same point. If the statistics are good enough, then at some point you also have to tell yourself, well, sometimes good enough is good enough. Because this is a really nice range that we're above now. And you could hardly imagine that like this whole dump. Whoa, 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 whoa! Look at the downtrend. Shit, I didn't zoom out yet. Man, holy carnage! Wow. Wow, wow, wow. Negative 82. Crazy. That's a very important level. Yeah, okay. So this flip level is really important because this is also a mark structure level. Yeah, this one I probably wouldn't take. Gala I wouldn't take because we have well we're clearly in like Gala is really in a big downtrend. Already has been for a while. So until you break some proper structure, probably shorts will be the better play than longs. Besides that, we have this pretty important resistance right here. There are basically 2 points. We have a range, a clear range, like a really beautiful range, and we are currently above these range highs. And this is for me just an example of really good range. And these kind of levels are very high probability rejection levels. Um, it's when a market structure level gets hit for the first time. I've done backtesting on this in the past. And this is actually something I want to implement into the dashboard as well, where I want to test these kind of levels being hit and how often it gives a reaction. I think if I can manage to put this in a rule system and gather statistics on these market structure points, so this would be the market structure high, this would be the market structure low. I have SR flip now, but that's not right. What I should have is like that. Well, just for my backtesting, they don't have to SFP. They could honestly, it could do something like this. At the very least, though, this statistics. So, say you were thinking about a short now, right? So, this is another use case. Say you're thinking about a short. You're like, okay, you've established all this. This is clearly a very important high. We're taking it now. Uh, do you want to short this? These statistics, at the very least, tell me to wait with shorting it, right? To wait with shorting it. It's a different thing to start longing this at this point. But at the very least, I would be cautious with the short and maybe preferably see something like this happen before you take the short. Uh, that's definitely something I would take away from it. But given the higher time frame overview, which is pretty bearish, I mean, wow, just looks like a bear market, doesn't it? So high time frame overview, pretty bearish, and therefore, I preferably would not like to take a Gala. Doesn't mean it cannot go higher, but I think it would make a lot more sense to look for shorts here in these areas, and I would wait for that. I would wait for that, but I probably wouldn't take it here because P2 is not a very or hour 9 is not a very good P2 as we have seen. Yeah, I would probably let that one go. I would long that. I would not long that. So then we have once again, by the way, you could still decide. It's also because this one is a little bit lower than these, right? You could still decide for yourself, well, this is good enough for me. I will just go for it. But personally, I would let that one go. I do like YGG, BTC, BNB, especially BNB. So, see, this is interesting how BNB has kind of the worst statistics, but it is personally so far my favorite from what I've seen because of the price action. So this is actually one of the reasons. So one of the things I want to implement into the dashboard, and man, guys, I'm so happy that I can start working on the dashboard again. These tutorials are an absolute grind to write. Auke knows about it now. Once again, thank you very much for helping me, man. It really means a lot. But yeah, it's not the most fun thing to do. I'm very happy that I can start doing other things, but it is my impression that, for example, right now we have a pretty strong trend to the upside. And I do think there's a case to be made that you could say that when your moving averages, for example, are going up in a certain degree, or the distance between this moving average and this moving average is at a certain level, that you can much more aggressively along. So what I'm saying is basically that I'm gonna implement these moving averages, and I do think that if you filter for certain values, to say these ones are at least 1% apart, or whatever it is, that's something I'm gonna find out. But that you will see that these kind of moves happen even less. So right now, what I've been doing implicitly is saying, well, this uptrend is looking very strong. Therefore, I personally believe that this 20% here is actually lower, right? Because this is not saying there's a 20% probability, right? We're taking one aspect of a very complex system, right? There's many different variables that we do not know, but this is a measure we use, and yes, we can derive an estimated probability, but there's obviously different factors that go into it. At sometimes you will have a lower probability than it is mentioned here, and at some times you will have a higher probability, and that's all right. Like in the end, you cannot explain everything; it's simply impossible. No system has all the information. So you don't need to. But what I do think is that if you can, for example, say, well, I want to see what the data looks like if the moving averages are this far apart. What I think is that this number is going to be lower. So that's what I'm doing, right? I'm saying here, okay, the uptrend is very strong. So therefore, I think this 20% actually it's lower because the PA just looks very good. I think I can quantify that by using moving averages, because basically I think there's a way to quantify the strength of the trend or the aggressiveness of the trend. And if you can see it's going up this much, you can say, well, if that happens, then what are the percentages like? And I do think it is going to be lower, because I think if you have a strong uptrend like this, you're just much less likely to see something like this. So I'm going to quantify that into the dashboard. It's one of the features I want to be working on, something I really look forward to, because I do think it's going to help us create an even bigger edge. And this is what I am talking about when I write yesterday in the Discord of, first, I'm going to make complementary statistics. These are the kind of statistics I'm thinking of. So these moving averages, you can do some other cool shit with it as well. For example, the average return per moving average distance or something. So say, for example, you could see what the average return is of any given day if your moving averages are at least this far apart, right? Then you can see the distribution of, how many days get 1%, plus 2%, plus 3%, or negative 1%, and so on. Lots of things you can do with it, really. So this is something I look forward to, because I do think it is going to give us even more confidence in these kind of statistics that we are using right here. So stay tuned for that. I'm definitely going to be working on it after I finish some other things. I have some other really cool ideas as well that's going to make the dashboard a lot more usable. So that's going to be it's going to be really good. It's going to be really good. So BNB looking very good still, in my opinion. Not getting the entry we were hoping for. Not getting the entry we were hoping for just yet. Bitcoin still hovering around there. Come on. There we go. Still hovering around. YGG, the more risky play, but statistically speaking, definitely worth it. Oh yeah, look at that. We even touched this, what is that? 200 EMA on the 4 hour. It's a big level. Another warning sign, as if you didn't have enough. As if you did not have enough. Yeah, that's the look of things. Still thinking higher prices make more sense. Drop in the chat real quick. Auke tutorials are a grind indeed, but all the more reason for everyone to carefully read them. It's a goldmine for knowledge and information. It's making me an absolute dashboard beast. Yep. Agreed, man. I said it in the dashboard or in my channel already that I highly recommend going through them. If you're new, obviously definitely go through them. You're probably encounter them anyway because it's a new structure of those. New, I still recommend going through at least some of them. It's easier to find them, and if I can tell you any one to go through, if I would have to pick one, then it would be this one right here, understanding filter mode, right? I wrote it. Thank you very much. This one is gonna give you information on how the filter mode works. Very important. There's some nuances that you will need to understand for maximum efficiency. And this one is also in video format, by the way. So if you go to the video tutorial series, which are also new, then you see here filter mode right there. So same information, just depends on whether you prefer to read, learn by reading or learn by watching. Let's see one more thing. If we want to close off with any, oh yeah, for any of these setups, what I always want to do is check the multi-time frame summary page. So say, for example, right now I'm looking at Bitcoin. I'm looking at BNB, YGG, and yeah, I wouldn't take Gala, but let's just add it anyway. And I want to go to the summary page. No. So what I want to not see. Oh, YGG is strong bull on the 8 hour. Let's check that out. So this is nice. So what I actually wanted to do is check if there's any strong bear signals, and that for me would at least be assigned to weight. But what I see now is the complete opposite, is that I see a strong bull signal on the 8 hour, and wow, that is very close right now. All right, so that's actually very interesting. Let's see how bullish that actually is. Let's go to the distance statistics. The only thing is that both P1 and P2 are in the first block, so there's nothing to say there. However, YGG, I need this block right here. So that happens more or less 5.9% of the days, or 8 hour candles, I'm sorry. And we see this, the last time was 17th of November 2023 that we saw such an 8 hour candle where this happened. Yeah, that is wild. Then you could potentially even enter there with below the, because it stands to reason that if you take this, you will take this as well. But obviously, this is this is one of those cases where you could potentially use an 8 hour P1 as invalidation for a daily time frame idea. I'm not sure if I would take this one because the RR on this one is already pretty good. I mean, obviously this is much better, but there are many warning signs, right? So maybe I would prefer to take it a little bit safe. Then again, I definitely would prefer to take it safe. So I wouldn't do it in this case, but I do think it is a nice example that if you see something like this happening, oftentimes this is what you can do, right? Because now the daily is staying up, the 8 hour is staying up. We're very close to taking that 8 hour low though. But usually what you can do is say, okay, well, the daily P1 is quite far, but the 8 hour P1 is not far. So at the very least, you can enter there, put the stop loss below the 8 hour P1, target that, I mean, this is already 4.7. And that's if you enter there. Right now would be 8. But target is high right there, and then you can just see what happens. But it stands to reason that if that daily buys will play out, you go here as well. In this case, once again, I wouldn't do it. If I would take this, I prefer to do it more safe because of the environment we're in, which is a little bit more. Well, there's a lot of red flags there on YGG. But it is definitely like normally if you see something like this happening, you could definitely take it. And right now, you could even wait for a low time frame break. Low time frame confirmations. So you don't have to enter now, but if you know that 8-hour P1 is here, say you would get some confirmations on the lower time frame, you could just wait for that and then enter with your stop loss below the 8-hour P1, and then aiming for the daily high. But right now, I wouldn't. I wouldn't enter this with an 8-hour P1 as invalidation. All right, I think that's it from you guys. We will have to wait and see what the market does. There are some warning signs indeed. I agree with Kuba for down. And then again, there are some really nice setups in terms of statistics. I do think that the markets are still very volatile, and I wouldn't be surprised to indeed not see any follow through. Again, Bitcoin waiting for this level. Seems like we're going to hit it. Once again, if we start losing 60K or something like that, you don't want to get too deep into this because then you will go very fast to here. So I prefer to see a dip into that and then up. If not, no trade. Here, BNB, same thing, but don't know if we'll get it. I really like BNB. It's my favorite. YGG, went over it enough. We know Gala I wouldn't take because of all these reasons mentioned. So this is kind of the process you go through, right? You obviously, I haven't discussed all the coins. There are more on the list. See, for example, one of these. Yeah, some pretty nice ones as well. Engine coin. Okay, I'll do engine coin because I really like engine coin. And then I'll knock it off. Engine coin. Let's go to this one. Nope. Don't like it. Don't like it. Very compressed. In that range is very, very high. No, wouldn't take that. See, so this is how you can do some very easy scanning TA. This is just, for me, this is way too compressed. Even more compressed than Bitcoin. Right, at least Bitcoin has some moves there. So, nope. Nope, nope. Big nope. Let's see. AVAX and XLM. Yeah, so this one looks nice. See, this is more like it. Although, once again, we hit the naked daily point of control. Yeah, I have to admit, you do see a lot of liquidity points being hit at the top. We're definitely hunting for liquidity market wide. You can see this everywhere. Not the things I prefer to see, which asks for caution. And especially with these, so with the other ones, with, for example, YGG, and, I made the case where it's like, well, this here, same thing for XLM, liquidity point hit. So with the other ones, I made the point, well, it doesn't really matter. These warning signs, because statistics are just really, really, really favored. You don't see that a lot. With these, it's a little bit less, right? We're at 20%. So that's obviously not the same as 2.3 or 6.8. So with these, I would be a little bit more cautious. Like I would be less inclined to say, well, I don't care about this naked data point control. Like I said at the beginning, that first one, I don't even remember which one it was. I think it was YGG that hit a naked data point control. Well, one of them. But usually when we hit naked data point controls, that's a red flag for me. And as I said, YGG, that's an exception. It was really an exception. Usually if I see this, I say, well, nope, staying out. So we do see a lot of liquidity grabs at the top, a lot of liquidity grabs. And I do think in this environment, you want to look for the assets that have this kind of price action like BNB. Let's actually look at XRP because I remember that had good stats for the weekly as well. Yeah, so this one looks better. I mean, we do obviously have supply here. And we took that. But so far going down. Yeah, I do think it looks like a lot that the market is reversing. I'm not gonna lie. This is because of Elon. I don't know if you guys saw that. Yeah, wouldn't take this either way too compressed. But look at Elon, what he tweeted. I don't know if you guys seen the interview with Trump, but what he said was that he would be willing to participate in a governmental efficiency program. And then he said this, I'm willing to serve Department of Government Efficiency, Doge. Legend. So obviously price had a little pump after that. But yeah, once again, very compressed, right? It's the same thing as engine. I don't want to trade in this. In this kind of environment, I wouldn't trade these kind of setups. I wouldn't trade these kind of setups. All right, still waiting for a point of interest to be hit. I saw someone, right? I don't think I would take ETH. ETH very compressed. Also not very good statistics for that reason. Yeah. So if I see something like this, for me, that's because what you have to understand that with these setups, what you're mostly looking for is continuation trades. These work best when you have some volatility coming along, right? What we're looking for. That's why I'm looking for. That's basically why I'm looking what I'm looking for with this PA. That's why I also like BNB so much, you know, because it clearly has that momentum on its side, right? It clearly has that displacement, and in these environments, they those kind of setups tend to play out most often. However, if you see this, and this is clearly contracting, right? It's clearly contracting, and you have to think for yourself, okay, what are the probabilities in this kind of environment that you keep going like this? And they're simply a lot lower than when price is clearly displacing a lot. So yeah, with this for me, no trade, no long, way too contracted. Way too contracted. If anything, I would just be focusing on range trades here. So, you know, shorting the high and longing the low. Maybe at some point I can get some statistics on that as well. That would definitely be cool. I mean, that is actually my end goal because right now I think a lot of statistics are very good for continuation trades, and I think they're especially going to be very, very. I mean, you can definitely already use them in ranging environments. It's about checking, but I think right now the way we use the summary page, they're especially very powerful when moves are happening. So, for example, in this area right here, then man, it's just it's amazing, right? Here you will get shit tons of good signals, but you need that volatility. So at some point, what I would want to do is create some mean reversion metrics where instead of continuation, you will. It would be really cool to get a rule set that will easily recognize a range or easily that will define a range, and that you can then get statistics on when price is likely to go back down into the range. And I do think it's feasible. So the end goal will be to have statistics for any market environment. And again, you already have some, you can definitely use them for other environments as well. This is, once again, just the way we are using it most often. There's obviously other ways of using it, and it's completely up to you how you want to use it. But I do think there's a lot to be gained in mean reversion statistics. So I definitely plan on doing that. For example, it would be really interesting to know when, if this kind of pivot is being put in, when is this pivot being put in? In this case, it's Friday during the New York session. And then when are these pivots being put out? In this case, it's Monday during the Asia session. I do think those kind of liquidity points will be taken out in a certain fashion. So I'll definitely be working on that in the future. Now, there's one thing I actually wanted to close off with. Thank you, Elon, that I said at the start. And I wanted to start off with the high time frame. Let me check. Similar drop. Yeah, okay. So this may be a good one to start off with. I marked out all the days since late 2018 that saw a similar drop on the daily as we saw last Monday, so 16% or more. And just for your information, I'm talking about this massive drop right there. So I said, pay special attention to what happens after these drops. So these are all the 16% or more drops on the day. And what I said, what happens after is that very often you range for a while, right? Range, 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 big range. Here, not so much. Here, not so much. But this was the COVID dump, black swan, range, range. So you have to understand that, and this is what I said here as well, that these is a daily time frame. So the ranges look, even if it's a very short range, it is quite long in terms of days. Like this is months, right? Months. So you have to take that into account. Anyway, the takeaway is that usually it takes time for the price to recover from such a move. And the other thing, so that's what we're seeing right now, right? We have the dump here, and what we're seeing right now is a range. So for us, I think the main thing to do here is remain patient. Yeah, I do. I would be. Yeah, I have to admit, this is not the ideal price action. I agree with Kuba. There is liquidity grabs going on. If this provides no reaction, I wouldn't enter, right? So I would be very, very eager to watch for a reaction. But so we need to be patient because the market's just going to be in volatile for a bit while it figures out what it wants to do. This is something that I alluded to here, right? So patience is once again the name of the game. Judging from history, a local range here is most likely. So that's what's happening now. And again, this is what I posted shortly after this dump, and we're seeing this this range play out very, very nicely. And I do think we need to be patient there. But then the other thing I said was, where is this? Where is this? All right. We currently have a bullish week with a 28% move from the weekly low to the weekly high. Since late 2018, only 13 weeks had a move of 28% or more, which is 7.8% of the bullish week. In this chart, I marked out the last 8 weeks that saw at least a 28% move. Seems to have only very bullish environments, as in continued upside usually follows. So these are all the times we had a week this bullish. And what we can see is that pretty much every time the bullishness continues. Like here continued, here continued. Only not here, right? So not continue slightly, continue, and now we are here. So the question is, what is going to happen next? But I do. It's obviously not enough to make very confident decisions. It's not enough data points, but there do seems to be a tendency that that kind of move only happens during bullish environments. So let's see if we can get that bullish follow through after this. It would definitely be one of the exceptions if it doesn't, right? That much we know. Even here, we had some more bullish follow through before we went down. So that's what I'm saying, right? Like you can see here during this bear market, we didn't have such a bullish candle at all, not once. Not once. So, that's something to keep in mind. That's something to keep in mind. So I do, and I do still think we're bullish, by the way. A high time frame I still think we are bullish. If I can jump off the qualitative or the quantitative stuff and go to the quantitative. Uh, uh, um, Let me see. All right, so if we look at this from a market structure perspective, then this is still the weekly low and the weekly high. So right, we have had this uptrend there, as so. Right, so this is still intact. We didn't take out any market structure there. If anything, this still looks like a pretty healthy retracement to me. Very healthy, actually. And then even on the daily, I don't see any break in structure. This is what I see. And I do realize I take, like other people might call my daily the weekly, or well, in the end, it doesn't really matter if you call this the daily or the weekly. And if anything, we just so this is actually what I said at the start, right? That oftentimes these mark structure levels give a very nice reaction. Well, we see this now here as well on the daily, and daily is obviously a very, very, very nice level. So what is happening for me, at least on a mark structure perspective, this is still bullish on the daily time frame, and then this is still bullish, or sorry, on the weekly time frame, and this is still bullish on the daily time frame. Make that yellow, because obviously an impulse on the high time frame has multiple impulses on the lower time frame, and therefore, yeah, I just think, well, not I just think things are still looking bullish in terms of this market structure. We just had this tap of this daily low, which is really nice. I mean, this was a freak event, obviously, but I mean, look at that volume. So this was. It goes without saying that a lot of coins changed hands right here. A lot of coins, lots of liquidations, lots of selling, lots of buying. And then we also have that thing that I just showed you. We have this, right? Bullish market structure. So I do still think that the weekly high is coming, but I do think that we need to have a little bit more patience, because a drop like this, which is also very rare, the market needs some time to recover, which is why I said a local range is more likely, which is what we are seeing. Let's see, Hans. For me, as a starter with few trading volume, €50 plus VOD is a hefty price. Yeah, as a starter, I would not recommend buying it anyway. I would really recommend. I have that in my on the page at some place as well. That I would really, really, really recommend first getting foundational knowledge, getting some system in play, and then start using statistics. And then I do believe it's worth it. I mean, from the member feedback I've had, from the retention rates I have seen, definitely seems to be worth it. And I do think if you have a system in place, it can greatly increase your win rate. And yes, right now it's a little bit less with the lower volume. I definitely agree, but we cannot predict when the high volume and the low volume is going to be. But once this bull market starts going again, it's going to be a lot of fun. And the low volume is a problem always in trading, in generally speaking. But in any case, I would not recommend buying it if you're a starter. I really wouldn't. It's more if you have. It's very valuable if you already have a system in place, if you already have a foundation, a good foundational knowledge of technical analysis. So if you have that, it's really a very powerful add-on, and it can skyrocket your win rate. If you're more at the beginning cycles, I would probably. It's not true for everyone. Some just go really well on the statistics part, but in general, I would suggest diving into basic TA first. which is not something we offer. Vamsi, let's see, any opinion on CRV? Well, let's check. What is CRV doing? Nope, no opinion on CRV. It doesn't show any direction. So from this, I can already see that not much is happening on CRV. Yep, nothing, right? You can see this whole candle is not much happening. If you're asking me for a higher time frame idea, wow. Whoa, whoa, whoa. Oh, I've seen posts about this. I've seen posts about this that the most hated rally of all times is coming. I honestly don't know. I do not dare to say. I don't know enough about the project, about the community, and in my opinion, from the TA right now, it's way too early to tell this is going to turn into the most hated rally. Well, what's definitely true is that there is an enormous amount of volume. I don't know where this is coming from, but I do not dare to give any opinion on the higher time frame. Cuba, €50 for the tool like this is a very fair price. When I found it, I thought it would cost a lot more. Plus, you have a cool community. Thank you, my friend. I appreciate it. I tend to agree. Thank you for mentioning me so many times. Yeah, man, bro, you had some good points. You had some good points as we saw. All right, guys, I want to leave you with that. We still haven't hit that target. Maybe we won't. Maybe we'll continue up. But you know my high time frame bias. You know the statistical biases I've seen. I hope you learned a thing or two about things I look out for, red flags, things that make me discard red flags. Right? For example, the YGG that is just looking very, very good, and or at least the statistics are very good, and then you can choose to say, well, screw the red flags. If it's this biased, I'm willing to go for it. And for example, with BNB, what we saw that this is, well, it's already a good probability, 20% of P1 holding, or sorry, only 20% of cases would we take out P1, but where I said because the market is, this chart is looking so bullish that in this case, I would argue that it's probably even, you could be even a little bit more aggressive on that and saying that it's probably less than 20%. So I want to leave you with that. Thank you very much for tuning in. It's been 1.5 hours. That's a sweet time for me because I won't bore you for too long. It stays nice and compact. And for everyone that's looking back, they don't have to take too many hours of their day. So everyone, appreciate it. Thank you for the questions. I really love the questions. It's way nicer if there's some engagement going on. Makes it even more fun. I always like doing it, but that definitely makes it a lot more fun. So thank you very much. Thank you for your engagement. Thank you for your time. I'll catch you in the Discord and on the next stream. Thursday, Trader Tim is doing a stream as well. So definitely check the schedule for that. It's going to be at London Open. All right, guys. Thank you very much. Have a great day. Have a good week. Catch you in the Discord. Catch you on the next stream. Ciao, ciao.